All right, welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. We got a big news event coming up here. We got the minutes coming in at 2 o'clock, and then we got the press conference itself with the Fed Chair Powell speaking on the 75 basis point rate hike that is expected. This morning we were looking at the CME group, and they said that there's about an 82% chance of likelihood that they're going to rate hike at least 75 basis points. So we'll see what they say. We had a game plan this morning coming into the today. Basically, what we were doing is we were watching the DXY. You had a previous high of day setting right there at roughly 110 spot 87. We were hoping that that level stayed intact. You can see the two white lines that I have here. This is the range that I wanted price to stay in before the meeting, because then at the meeting or at the minutes, we would get a spike up, liquidate the day's high, and then roll over. The reason for this thinking, the process behind it, is I believe that you are forming a 3-drive topping formation. Where is my chart? Let me see here, over here, perhaps. Yeah, there we go. All right, here we go. All right, so yeah, let's go to the daily time frame. You can see here that you have, a 3-drive topping formation. That is, of course, if this becomes the top, right? Basically, a 3-drive topping formation is when you make insignificant highs once you have taken out the all-time high. You would want to see that basically push up and then reject. Can you guys see my screen and hear my voice? Refresh, try it again. Y'all let me know if you can see my screen, hear my voice. Yes. Yeah, just try to refresh it. All right, cool. Thank you. Appreciate it. Just making sure that I wasn't having any technical difficulties. Thank you guys very much. All right, so moving on. When you make an insignificant high from the previous high, so essentially when you have an all-time, or not an all-time high, but when you have a high in a bull market, in order for that bull market to continue, you typically want to see the breakout above that high, and then you want to see bullish continuation. Mainly, bullish days every day. Like, you don't even want to see a pullback. 5-6 days of straight up once you break out. When you put in an insignificant high, and what I call an insignificant high, you're not going to hear that term anywhere else on YouTube, but whenever you make an insignificant high and then immediately pull back, or within a week or two, to me that looks like a distribution formation, meaning that a lot of big money is just setting right above the highs. So when you push up into there, you are met with a ton of heavy selling. The market will pull back for a bit of time. People will re-engage the market for trend continuation, because we know that the markets, when trending, typically continue to trend. Then the market will go back up, set in a new high, but then those sell orders will resume back into the market. The best example of this that I can show you is Bitcoin. Obviously, back here, everybody was screaming for the Wyckoff distribution formation. And it is nothing other than a 3-drive topping formation. So basically, when you had your old all-time high, that's not going to be the exact all-time high. This is just an example. You can see how price based right up under it for a long time. This is multiple weeks until you got the breakout. Once you got the breakout, it wasn't insignificant. You've seen bullish continuation, pulled back, and then more to the upside. And each time you set in a high, once that high was broken, price traded up, right? That is bullish continuation. And then this is where you would see the insignificant high is here, for instance. All right, so we have this high right there. Price trades up above it, but doesn't get the bullish breakout. It doesn't get bullish continuation. It falls back down into the range, and obviously that is resistance. So to fall back under resistance doesn't show you that the market is strong. It shows you the exact opposite. Yes, we had a breakout above the old all-time high. However, we're not getting that bullish continuation. We're not getting any demand above this price. So the market tends to fall back into the range to look for equilibrium. And that's exactly what happens. But then you get the second drive and then the third drive. Once you get the third drive of that insignificant high and then instantly show us a bullish reaction, that is a big, huge bearish signal. And that is what we're looking for to play out potentially on the dollar. The other asset driving this fact, we got 3 minutes until the minutes. The other asset driving this fact is obviously going to be Euro USD. You can see a clear and obvious descending wedge. Descending wedges are typically looked at for bullish breakout potential. You're at the bottom of that range. Another vitally important aspect of today's setup will be simple. This is through 2 weeks ago's low on the euro. You can see how you have not purged that low just yet. So this morning we were talking about this low. If we do get that wick down through the low, then we want to see an instant push back to the upside. That would be the market liquidating 2 weeks ago's lows and then getting enough momentum to go back to the upside. If you do push, which you will, I almost guarantee it, since this is where we were when we made the first live stream for the Discord. This is where we are now. So we have new data. We are setting right there. So I am almost for certain I'm not 100%, obviously I don't know, but there's a pretty good chance you're going to see a spike down through that white line, and then we want to see an instant bullish reaction. Let me get daily effects pulled up over here. The speech isn't until 2:30, but we will get the minutes. The economic projections and the rate decision. So let's give it time for that. Or I have this pulled up over here. I don't know what this is. It's obviously not right. Just bear with me. I guess there you go right there. So that's a pretty big smash through. I'm not seeing any numbers yet populated on Daily FX's website here. There is a slight lag. But there's your push lower, so that means the dollar is pushing to the upside. We have Bitcoin. Bitcoin was climbing with the dollar, so yeah, this is not a liquidation break trade. More than likely, this is going to have a little bit of merit to it. Yeah, you're pushing all the way under there. A liquidation break is simply when you just push through the liquidity and then you take off in the opposite direction. Now, there has been several times where we have seen news events happen like this where the FOMC comes out. You get your first initial spike in one direction, and then when the meeting, the actual press conference itself starts up, you then see it go off in the opposite direction. We are on Bitcoin. Let's get over here today. We want to see if we are trading to daily support. Right over here is that daily support that we were watching. It is the very last daily support in this structure. So if you were looking to be a buyer on Bitcoin, right there at 18,790 is where you would have wanted to throw that bullish entry. Please understand that there's a lot of volatility in this. Do not be using a lot of leverage, as it is pretty much gambling at this point to take any long positions. I'm going to go ahead and fire off that long position if we do get back down there at 18,790 spot 91, and my stop loss will be under that wick. So we'll see if we can get in there. I am not doing this with a full size position and not a lot of leverage. This is just going to be a simple dimple play just to see if we do indeed get that push back to the upside. Liquidating the bottom end of the range. You have taken out today's low, all right, and yesterday's low. This was yesterday's low here. This was today's low here. So you have taken out both yesterday and today's low, and you are getting that snap back to reality here. as we go. The dollar has been climbing all day, making fresh high after high after high. So basically, we were under the assumption that once we got up to around 111, we would potentially see it roll over and start to head to the downside if this is indeed a 3-drop topping formation. But, like I said, that's quite a bit of a large size candle there, and you're not getting that rejection. These news flashes typically come out really, really quick, so you get just a stab to the upside and then instantly back down. Price will go falling. The spread was really, really nasty on Bitget this evening. I actually threw a market order in there at 18.6 and I got filled at 19,000. That's not a good fill at all. That is the dangerous part of taking these positions, especially in these news items. I have a very, very wide spread. It is completely under the new low of day, and that is going to be right in there, as you can see there. We have DXY pulled up on the chart up there. Let's go ahead and get Mr. Bitcoin down here and get him on the 5-minute time frame so we can see this play out. This white line down here is daily support. For any of you new viewers, welcome. If you are new, I should say welcome. If you are not, welcome back. We do trades on this channel, real live trades with live funds, and we are currently waiting to see if 18,790 91 is going to hold. That is the last daily support. We have already lost monthly support, we have already lost weekly support, and we are currently holding at this last daily support. If we do close today's candle under daily support, tomorrow will be a very important day because we need to see, is that closure under support going to be legit? Did supply exceed demand? Are we going to get that further continuation down, take out June's low, and possibly head down to 13.8? That's the next area of significant support, and we will see what happens. SPX pushing down, making a fresh low on the day. Once again, the DXY not falling down. This does look like it is. If it is going to be that first initial fake out run to the upside, it is holding its weight pretty good. Typically what we want to see is just a spike through and then an instant pullback or an instant fall. As long as the S&P 500 is making new low after new low, the chances of Bitcoin being a buy are slim. We need to really hear what the Fed says. Okay, here we go. We got our numbers right here. Previous 2.5%. Forecasted was 3.25%. That was coming right in line of expectations. So the market is going, or the Fed is going to hike another 75 basis point. And depending on what his language says inside of the news conference or the press conference, will let us know if the markets are going to continue to be bearish, or if we're going to finally get a little bit of relief back to the upside. And as you can see, it doesn't look like that is going to be the case. You do have a daily support over here on the S&P 500 coming in at roughly $3,800 at $36. You're currently under that. You can see that you've taken out the last 3 days of lows. So you really basically want to see price start to get back above these lows here, and then start to trend away from them. The longer it trades down here, the worse it looks. Any trade on this wasn't really. I couldn't have gotten a short position. Maybe you could have. Maybe you take trades in a different manner than what we do over here on this channel. But what we do on this channel is we take trades at high probable areas, the higher probabilistic areas. You did have daily resistance up there, but you can see that you flew well up above it. So launching into a fresh short position there would have been difficult, but possible, obviously. So yeah, there's that. And on Bitcoin, let's see if we had anything coming into it. We did have a bullish bias, expecting the market to really have already priced in this move that we've already seen, basically with risk falling down since we got the CPI number. And remember, the CPI number was not bad. It wasn't terrible, but the market took it as such. I guess the market wanted a much lower print than 8.3, obviously. 8.3 is just 2 percentage points away, 0.2 of a percentage point away from where we got last month. So maybe the market was anticipating 8.1 and lower, back down into the 7.9 region. And since that didn't occur, the market absolutely just got hammered. That's about all anybody can say. I mean, it's just conjecture and speculation, but it is what it is. That's what all trading is, essentially. All right, so yeah, first initial move is a spike on the DXY. If you come over here and look at this on the daily time frame, you can see that that looks like a legit breakout. It does look like it wants to see higher prices. The euro has broken down back under where we were looking. There is that level. It is not last week, 2 weeks ago's low. You would typically want to see that area hold as support. The objective would be to simply liquidate any early longs that got long on this week or last week, liquidate all of them, and then generate the real orders and start to move away. But you are breaking down. Parity could not hold it. We've been trading sideways at parity for 4 or 5 weeks now, and you are breaking down. So we'll see if it wants to get back above 2 weeks ago's low. Remember, this move could be faded if the Fed comes out and says a lot of useful or helpful keywords. Thank you for the super chat, Tomer. I really appreciate it. He says best channel on YouTube. Thank you so much, my friend. We'll say the best trading channel on YouTube. I watch a lot of people on YouTube like Mahler, Critical Drinker, people that review movies and such. Being home all day, as you can imagine, I have plenty of access to movies. So we're just going to sit here and watch price. That long position is still in that I have on Bitcoin. If we get down and make a fresh daily low at this point, I will just exit the trade with a loss. The fill was absolutely ungodly, so I have no quarrels or no qualms with closing that position. Absolutely. What up, fam? What up, Nick? Aaron says 3.25%. Yep, 75 basis point. Yes, sir. 10-year dropping, now the 10-year up. Yeah, it's going to be like that a little bit. Did you fill, Heath? Yeah, it was a terrible, terrible fill. Absolutely terrible. I am still holding shorts on the USDC side of the Bitget platform. Obviously, if you're not familiar with Bitget, they have 3 sides of their platform. They have the USDT future side. They have the Coin M future side, which is your inverse swap contracts. As of right now, on this day, they only have 2 inverse swap contracts. That is of Ethereum and obviously Bitcoin. And then you have the USDC side of the futures. So if you don't want to trade with USDT, you can trade with USDC. They have 0 KYC, so you can seamlessly take cryptos from your cold storage wallet, put it right to Bitget's exchange if you would like to do that. No KYC. They have the lowest trading fees than any other exchange in the world. So if you want to sign up, there is an affiliate link in the description. Make sure you use code XTSC. That is X-Ray Tango Sierra Charlie when you sign up, or when you deposit funds. You can get up to $4,000 in free money if you sign up, or if you deposit funds, I should say, because you're not really signing up. You're just using an email address and then dropping some cryptos. It's a great exchange. So far, I love it. This is actually the worst fill I've ever gotten on the platform. And that's to be expected when volatility is rising, and it does rise big time right before a news event. The VIX is definitely getting a bit of a move and affecting prices directly. Let's go take a look at it while we're talking about it. Oh yeah, big 5-minute spike there on the VIX. But it seems to have coming back a little bit. I do believe here. It appears to be real-time data. So yeah, big nasty spike. It's that volatility. If you bought calls for this expiration week or any expiration week after this week, your actual the volatility would have made that premium a lot more. Sorry, I got distracted. I was looking at some other things. Yeah. So yeah, if you bought any puts or calls today or any time before today, today would have that premium much more expensive, basically because volatility rises in big time news events like this. And make no mistake, FOMC is of the biggest news releases that we get on a normal basis. You got NFP, FOMC, and then CPI. CPI is not that really big of an important number when you're in low inflationary times. People don't really care about the CPI when you're setting under 2%, right? But when you're above 2%, yeah, the number gets a little bit more important. So let's get SPY up over here. See what it did. Yeah, it come off pretty good. Took out yesterday's low with this move. Trading at the high of day, roughly around the high of day, just a little bit above yesterday's high. And then boom, shakalaka, straight to the downside, ripping all the longs apart for today and yesterday. The trend has been down. We have been short on Bitcoin for a little bit, but I am overall bullish on the asset. I do believe that Bitcoin is at a good spot to be a buyer for your spot account without leverage. Obviously, this is if you just want to be a buyer of Bitcoin because you believe in it and you think it's going to be more expensive in the future. Down around here is a decent place to buy. Anytime you're around the 200 simple on the weekly closing basis, that is a 200 weekly simple moving average. Anytime you're under that anywhere in most risk assets is a decent place to be a buyer if the asset trends to the upside, like the SPX, like the NASDAQ, like the Dow, like Bitcoin. Clearly, if you look at Bitcoin's chart on a monthly time frame, you'll see that it trends from bottom left to upper right-hand corner. That's what you want for a bullish asset or long-term growth, if you will. So Bitcoin still hasn't made a fresh low of day. After that low of day was cemented, it's still just basically trading right around there, flirting with yesterday's close. But it cannot get anything going here to the bullish side, and the DXY is still setting right up there on the highs. Just be patient. When 2:30 rolls around and Mr. Powell starts speaking, we're going to try to stream it. I need to find a good URL for that. I don't know if this actually is or not. Ads, the YouTube ads. Yeah, it seems to be the same thing. I don't know what that is. Thank you, Dubs. Appreciate it. Let me go over here to the Discord so I can pull that up. Well, it's going to pull it up on the other browser, but it doesn't really matter. I'm going to turn it down here because we got time. We got another 15 minutes. So we don't have to look at this screen. Let's get it back over here. Beautiful. So Ethereum is broke down below yesterday's low, below today's low. Everything's trading under at least 2 days worth of lows. The dollar has been bullish since the 19th. So 2 days straight up. And we had already taken out the high today. So that's kind of why we had a little bit of a bearish bias on the dollar coming into this, only for the news conference. But it obviously is not bearish. But with that being said, this could absolutely reverse at the conference or later on today. Let me show you that on Bitcoin real quick. We'll keep an eye on everything else, but this was the FOMC meeting here. We went over this morning. Let's drop it down to the hourly and pull it up here. So if you come here, you can see that we're at roughly around there. What we want to do is we want to go over here to 2 p.m. That is where we need price to get to. That's the meeting. Bitcoin was bullish going into the meeting, even though it was overall bearish. So here is the meeting. That's the actual minutes. When the minutes came out, you can see that Bitcoin traded on up, set in a high of day, and held that. So basically, I shorted Bitcoin there based on daily res. Going back out to the daily time frame here, you can see daily resistance right there. And if we go back intraday, you can see how Bitcoin traded up to that daily resistance level, set in a new hourly resistance level, and that level maintained without any closures above and gave you multiple opportunities for short entries because the news was bearish, but the market reacted bullish for it. But everybody knew the news was bearish, and it just took the next trading day. So here's 5 o'clock, 8 o'clock, 9 o'clock, which is the New York stock market open. Look what happened then. Boom. Nice, big, solid move down. And this was no news. Then the next candle, boom. Bigger almost than the actual newsprint. And then finally, that baby right there. Boom. So, I mean, yeah, shorting right there, that was the short entry. And if we go back out to the daily time frame, you're going to see just how big of an event that was. Just let it play through here about 5 more days. So these are days. So that was a great short entry based only on technicals. And the fact that, you know, the news was supposed to be bearish. But today's news is definitely bullish for the dollar, right? It's definitely not good. Rate hikes are never good for risk assets. And the more they hike, the worse it's going to get. Pardon me one moment while I go grab some more water. All right, let's go. So yeah, that was pretty much what happened the last time. Well, not the last one we had, but 2 FOMC meetings ago. So as of right now, you currently have an engulfing candle because you did take out the previous day's low and the previous day's high. So where does it close today? That will be important moving forward. Because just because the news is actually bearish for the market, You have the news, and then you have the market's reaction to the news. The market could absolutely buy into this. Usually September is a bad month for risk and Bitcoin, but a lot more volume starts to come in around October as market participants are starting to adjust their portfolios, getting ready for tax season or getting ready for the end of the year. We do have a fresh new quarter coming up in 9 days. So we will be starting Q4 in 9 days with the monthly close in September. That brings upon Q4. Hello, Brian. Hello, Nerdrotic is good too. Yeah, I'm sub to Nerdrotic. Absolutely. Yeah, I hope it wasn't the sound of a lighter. Yeah. 19 to 20K is such a great price, even if you expect Bitcoin to go to 100K. That's a 5X, and 100K is very reasonable. Yes, I believe that as well. I believe Bitcoin will be worth $100,000 in the future. Absolutely. I believe it is possible. Thank you, Wes, for the link. Pound USD breaking one spot, 130 like it was nothing. Yeah, if the dollar's ripping faces off, it's only normal that pound, euro, and everything else is taking a dump. But remember, with the pound, it's not really, there wasn't really a tradable idea because there is no legit supports or anything close by. I mean, this is all time, it's all-time lows. It's been all-time lows since you broke down over here, right? So for the last 2 weeks, you've been making fresh new all-time lows. It's best to just let that continue doing what it's doing and not try to pick the bottom on that. Whereas Euro had only one benefit for potential shorts or long entries based on liquidating this right here. So if it does get back above 0.98640 and it maintains trading above that price could be a decent place for a bullish entry, and you would mark that risk off by today's low. So low of day. That is if you get back above that price. And you can see that for the last 3 hours, we were trading right there. Right there. So, yeah, not a bad trade idea. And that would be more or less for a swing trade looking 5 to 7, even 10 days out. If this is going to mark the bottom of this current market cycle. And the only reason that would be is, like I said, a lower CPI. There really is no fundamental data out there that is bullish for these markets right now. But we've seen the markets do crazy things. All right. And Bitcoin looks bad intraday. But remember, daily support is the level that we are currently watching. And we do not want to see a daily closure under this tonight. Anything above would be good, right? Anything that stays above 18,790 gives us a little bit of bullish hopium. And that's pretty much the only bullish hopium that we have. It's been really, really bad. Something to take of note or something to keep in mind is that on CME futures, you have already liquidated July's low. You have fresh yearly lows on CME. So this was June's low over here. You liquidated it there. And then we just made a fresh 2022 low there on the 19th, so 2 days ago. We want to see it hold at support. That's your last support. Out anything higher than intraday. Like I said, you're already well under the monthly, already under the weekly. So this is the last support. If we lose it, there is a potential that you will see much lower prices. And I'm okay with that. I will buy it all the way down to 13.8. 13.8 being yearly, quarterly, and monthly resistance. Right there. Excuse me. Resistance, breakout. So that's the level that I would be aiming for if we do indeed take out June's low. Daily supports there. Weekly supports all the way up there. It would be nice for Bitcoin to start closing dailies above that and get some continuation up. A dollar did take out that ascending trend line there. Let's see what happens when the news comes. Or when the speech starts. We've already gotten the news or the minutes. All right. Let me go over here real quick. Fed forecasting 4.4 to 4.6. People will grumble. Are you talking about the job loss? Yeah. Yeah, they can essentially they can cut rates until you get above that 4.1 target of unemployment. US 10-year bearish reaction. Let's go look at it. You got the first spike was to the upside. But yeah, one could say that that is a bearish reaction. And, well, you've been trading over the high since 2 days ago. I don't know which one of those is the high. Are they both the same? All right, so here we go. Powell's going to make us wait. Of course he is. Why would he be on time? There he goes.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 0.75 percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports.
We are a nation of debt.
As shown in our summary of
Higher
economic
interest rates
projections,
makes the
since
debt more
June,
expensive.
FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employment rising by an average of 378,000 jobs per month over the last 3 months.
Job market's
The labor
strong.
market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers. The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer-run normal level. Inflation remains well above our 2% longer-run goal. Over the 12 months ending in July, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In August, the 12-month change in the Consumer Price Index was 8.3%, and the change in the core CPI was 6.3%. Price pressures remain evident across a broad range of goods and services. Although gasoline prices have turned down in recent months, they remain well above year-earlier levels, in part reflecting Russia's war against Ukraine, which has boosted prices for energy and food and has created additional upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.4% this year and falls to 2.8% next year, 2.3%
They
in
don't want
2024,
to, Andy. It's just going
and
to be
2%
a product
in 2025.
of their monetary policy.
Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
No kidding.
The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective.
It's a long ways from 8
At today's meeting, the
Three.
committee raised the target range for the federal funds rate by 0.75 of a percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning
Data
to
dependent.
2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises to 4.6% at the end of next year and declines to 2.9% by the end of 2025.
Yeah,
Still
I mean, it's
above
a
the median
reach,
estimate
but
of
it
its
could
longer-run
happen.
value. Of course, these projections
see
do
it
not
peaks,
represent a
and then
committee
they're
decision
expecting
or
it to
plan,
trend
and no
lower
one
over
knows
the
with any
next
certainty where the economy will
couple
be a
years.
year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions.
Yeah,
Restoring
that's
price
bearish.
stability is essential to set
What he
the
just said,
stage
that's
for achieving
obviously
maximum
bearish.
employment and stable prices over the longer run. We will keep at
Look
it
at the
until we're
dollar.
confident the
See
job
how
is
it
done.
was? That whole entire move has been faded.
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Mr. Powell. Why didn't you go 1%?
Hi, Chair Powell. Thank you for taking our questions. Gina Smiley from the New York Times. I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to stop.
When CPI starts trending lower.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it
It's
until
at
the job is done.
8.3.
So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular. To achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer run potential this year and next year. On the
Bear
second,
market,
though, so far
baby.
there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time.
Greg.
So what will we be looking at, I guess, is your question.
Now
So
dump it.
we'll be looking
Yeah,
at a
the
few
dollar's
things.
dumping,
First, we'll want
like
to see
we
growth
said.
continuing to run below trend.
Right back
We'll want to
down
see
to where it started.
movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%.
And you get that by CPI.
So that's what we'll be looking for.
they
in
want
terms
to see
of,
it trending lower. We have two
Of
lower
reducing
prints. We need
rates,
a
I
third.
think we'd want to be very
As
confident that
3
inflation
makes
is
a
moving
trend.
back
2
down
points make a
to
line, 3 makes
to
a
2%
trend.
before we would consider that.
Yeah, transitory was the wrong word to use, for sure.
Thank you, Mr. Chairman. Steve Leisman,
I love.
CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy from the rate increases? Thank you.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy decisions affect financial conditions immediately. In fact, financial conditions have usually been affected well before we actually announce our decisions. Then changes in financial conditions begin to affect
That's why you guys shouldn't be allowed to trade.
economic activity fairly quickly, within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that. And that's why I noted in my opening remarks that at some point, as the stance of policy tightens further, it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are affecting the economy and inflation. So that's how we think about that. Your second question, sorry, was?
Is there a point in time you could see pausing? Is it linear that you keep raising rates, or is there, oh, I'm sorry. I should know better than to not talk with my microphone.
Yeah, what's wrong with you? You're
I know better
freaking
than to answer your
fired.
second question.
Oh, there you go.
When
Is it linear? Do
CPI
you keep
starts
raising rates, or is there a
trending
pause
lower,
that you could
they
envision
will
where you
slow
kind of
their
figure out
aggressive nature.
what has happened to the
as far as
economy
rate
and give,
hikes are
time to catch
concerned.
up in the real economy, the rate increase
They
time
need
to
to
catch up
see
in
a
the real economy. Thank
trend,
you.
a decline.
So I think it's very hard to say with precise certainty the way this is going to unfold. As I mentioned, what we think we need to do and should do is to move our policy rate to a restrictive level that's restrictive enough
Restrictive,
to
that's
bring inflation
bearish
down to 2%.
for the
where we
overall
have confidence
market.
of that. And what you see in the SEP
Typically-
numbers is people's views
typically.
as of today, as of this meeting, as to the kind of levels that will be appropriate. Now, those will evolve over time, and I think we'll just have to see how that goes. There is a possibility certainly that we would go to a certain level that we're confident in and stay there for a time, but we're not at that level. Clearly today we've just moved, I think, probably into the very lowest level of what might be restrictive. And certainly in my view and in the view of the committee, there's a ways to go.
Rachel. Hi, Chair Powell. Rachel Siegel from The Washington Post. Thank you for taking our questions. The projections show the unemployment rate rising to 4.4% next year. And historically, that kind of rise in the unemployment rate would typically bring a recession with it. Should we
We
interpret
are
that
already
to
in a
mean
recession.
no soft landing?
Before Joe
And is that
Biden
kind of
was
rise
the
necessary to get
president, all you
inflation
needed
down?
for a recession data was two
you're right.
negative
in the
GDP
in the
prints.
SEP,
We've
there's
had them.
what I would characterize as a relatively modest increase in
So
the
I don't
unemployment rate
understand
from
why
a
everybody
historical
keeps
perspective,
saying
given the expected
acting like
decline
we're
in
not
inflation.
in a
Now,
recession.
why is that?
It's because
So
Biden
really,
has
it is
changed the rules.
that is what we generally expect, because we see the current situation as outside of historical experience in a number of ways, and I'll mention a couple of those. First, and you know these, but first, job openings are incredibly high relative to the number of
Yeah.
people looking for work.
I mean, you look at what
it's
it did
plausible
last month.
I'll say,
it was
that job
2
openings could come down
tenths of a
significantly, and
percentage point
they
from
need to,
8.5%
without
to
as much of an
8.3.
increase in unemployment as has happened
Long
in earlier
time before we
historical
get to
episodes.
2%.
So that's one thing. In addition, in this cycle, longer run inflation expectations have generally been fairly well anchored. As I've said, there's no basis for complacency there, but
But
to
these
the
rate
extent
hikes
that
will take hold,
continues
like
to
they
be the
will
case, that
start
should
to
make it
work
easier to restore
eventually.
price stability. And I guess the third
how
thing I
low
would
will the
point to
markets
that's different
go
this
is the
time is
question.
that part of this inflation is caused by this series of supply shocks that we've had, beginning with the pandemic and really with the
And the
reopening of
low
the
could
economy,
be in if
and more recently amplified and
CPI
added
starts
to by
trending
Russia's
lower.
invasion of Ukraine, have all contributed to the sharp increase in inflation. So these are the kinds of events that are not really seen in prior business cycles. And in principle, if those things start to get better, and we do see some evidence of the beginnings of that, it's not much more than that, but it's good to see that. For example, commodity prices look like they may have peaked for now. Supply
Right.
chain disruptions are beginning to
Wheat,
resolve. Those developments,
copper.
if sustained, could help ease the pressures on inflation. So let me just say how much these
The
factors
dollar is below
will
where it
turn out
started.
to really matter
Ethereum
in-
is
in
back
this-
above
in this
that
sequence
level.
of events. It
Bitcoin
remains to be seen.
bouncing off
We have
daily
always
support.
understood that restoring
US
price
10
stability
year
while achieving
was
a
the
relatively
laggard.
modest
I mean, the leader,
decline,
obviously,
or rather
in
increase in
today's
unemployment,
move.
and a soft landing would be very challenging. And we don't know. No one knows whether
Sorry
this
for
process will lead
talking
to a
over him, but
recession,
he's
or
not
if so,
saying much.
how significant that recession would be. That's going to depend on how quickly
just
wage and price
speculation is what I mean.
inflation
He's
pressures
just
come
saying
down,
right now,
whether
speculation.
expectations remain anchored, and whether, also, do we get more labor supply, which would help as well. In addition, the chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. Nonetheless, we're committed to getting inflation back down to 2% because we think that a failure to restore price stability would mean far greater pain later on.
Overall, this is good news for all of us because that means we can buy our favorite assets cheaper.
The labor market and how much room there is there.
Yes, vacancies are still almost 2-to-1 ratio to unemployed
glass is
people.
always half
That's
full.
That and quits are really very good ways to look at how tight the labor market is and how different it is from other cycles where generally the unemployment rate itself is the single best indicator. We think those things have for quite a time now really added value in terms of understanding where the labor market is.
Nick?
Nick Timmeros of the Wall Street Journal. You said not too long ago in describing the policy destination, there's still a way to go. But I imagine you have to have some idea about how you're thinking about your destination, whether it's a stopping point or a pausing point.
He's not going to
And so I
tell
was
you
wondering
guys
if you
that
could,
they're going to
discuss
not
how
rate,
you are thinking
hike
about
rates next time. I mean,
as the
you're not
data
going to
come
get that
in,
info out of
where
him no
that
matter how many
destination
different ways
is,
you
how
ask
it's moving
the
up, if
same
inflation
question.
doesn't perform as you expect. Do you want to have a policy rate that's above the underlying inflation rate, for example? And do you have an estimate for where you think the underlying inflation rate might be in the economy right now?
Well, so again, we believe that we need to raise our policy stance overall to a level that is restrictive. And by that I mean is meaningfully putting meaningful downward pressure on inflation. That's what we need to see in the stance of policy. We also know that there are long and variable lags, particularly as they relate to inflation. So it's a challenging assessment. So what do you look at? You look at broader financial conditions, as you know.
That entry on Bitcoin is looking
where
a lot
rates
better
are
now.
real and nominal in some cases. You look at credit spreads. You look at financial conditions indexes. We also, I would think, and you see this this is something we talked about today in the meeting and talk about in all of our meetings, and you see this, I think, in the committee forecast. You want to be at a place where real rates are positive across the entire yield curve. And I think that would be the case if you look at the numbers that we're writing down and think about, you measure those against some sort of forward-looking assessment of inflation expectations. I think you would see, at that time, you'd see positive real rates across the yield curve, and that is also an important consideration.
Howard?
Hi, Howard Schneider with Reuters. Thanks for the opportunity. I just want to be clear on the steps.
Kathy, to answer your question, I'll push play again real quick. Just let me do this. Your question is, so what's the plan from here, guys? We're up a little. Do we stay long? Where's our target? Yeah, I mean, the safest way to play this would be you can take profits at any point once the price gets above your entry and then reduce some of that risk, because if I'm right, if the dollar is forming that three-drive topping formation, if we have potentially bottomed out on the euro, then you could potentially be in a trade for multiple days, 7 to 10 days from now. If price continues to be bullish, then the entry that you are in currently is around the bottom of the market. So this is daily support here. If we pull it up on the big screen and let's just give it to you this way, you can see here, this is the low, right? Over here's the June lows, but you are at the lowest daily support, meaning the very lowest close in this overall consolidation formation. So, I mean, technically, to be a buyer under $20,000 at this point, if we do get that continuation. I mean, as of right now, we were discussing on this daily, but you are a bullish engulfing currently. Now, typically, a bullish engulfing is a better pattern or a better bullish signal in an uptrend. However, the fact still remains the same. This was a very big move on a not bad news print. Like I said, it was lower than last month. That is good news. So, yeah, I mean, typically this could have just been a run below the liquidity, and we'll see. Obviously, I don't know what price is going to do. It could absolutely roll right back over and come down and stop you out. But to answer your question, take profits and get most of the risk off the table. Make it to where you can't lose money, and then you can set in it with the small position and let it just grow for multiple days potentially. Like, that's the whole idea driving this trade idea.
You say it's meeting by meeting, but it sure looks like we're going 75, 50, 25. Is 75 next month the baseline?
You're welcome.
So we make one decision per meeting, and the meeting decision we made today was to raise the federal funds rate by 75. You're right that the median for the year end suggests another 125 basis points in rate increases.
So right now they're
there's
expecting at least
there's
another
fairly large group that saw 100
1.25
basis points addition to where we are today. So that
So
would be
that's
25
telling
basis
you right
points
there
less.
that
So,
the next
we're going to
two
make that
FOMC
decision
hikes,
at the
you're
meeting.
going-
We
or the
didn't make
two
that decision
next two
today. We didn't
meetings, you're
vote
going
on
to
that.
see potential
I
hikes.
would say that, we're committed to getting to a restrictive level of, for the federal funds rate and getting there pretty
Restrictive
quickly.
means, yeah,
And,
bad for the
that's what
markets
we're thinking about.
typically.
So just
So-
as a follow-up to that, I'm wondering about this sort of
That
risk
comment
management
right there could send the
considerations here.
markets
Given
crashing.
There's some discussion now of overdoing it. What's the incentive to continue front-loading right now? Is it lack of progress on inflation seen in the CPI reports, or is it a motivation to get as much done while the job market is still as strong as it is?
So what we've seen is inflation our expectation has been that we would begin to see inflation come down, largely because of supply side healing. By now, we would have thought that we would have seen some of that. We haven't. We have seen some supply side healing, but inflation has not really come down. If you look at core PCE inflation, which is a good measure of where inflation is running now, if you look at it on a 3,
Have a good one,
6,
Greg.
and 12-month trailing
for
annualized
stopping by.
basis, you'll see that inflation is at 4.8%, 4.5%, and 4.8%. So that's a pretty good summary of where we are with inflation. And that's not where we expected or
Well, we
wanted
just
to
had
be.
CPI
So
last
what that
week,
tells us is
predicts,
that
so
we
it's
need to
going to
continue,
be
and we can
October
keep
before you
doing
get the
these.
next inflation
and we
print.
did today do another large increase as we approach the level that we think we need to get to. And we're still discovering what that level is, but people are writing that down in their SEP where they think policy needs to be. So that's how we're thinking about it.
Let's go to Colby.
Thank you. Colby Smith with the Financial Times. Chair Powell, how should we interpret the fact that
Yeah,
core
he is
inflation
stumbling
is still
a
not
bit
forecast
today.
in the SEP to be back to target in 2025, and yet the dot plot projects cuts as early as 2024? And does that mean there's a level of inflation above the 2% target that the Fed is willing to tolerate?
So I guess core is at 2.1 in 2025, and in the median, and headline is at 2.0. So that's pretty close. I mean, we write down our forecasts and we figure out what the median is and we publish it. So it's not. I mean, I would say that if the economy followed this path, this would be a pretty good outcome. But you're right, it is a tenth higher than 2%.
Okay, just as a quick follow-up, I mean, if the concern is that underlying inflation is becoming more entrenched perhaps each month, then why forego the more aggressive 100 basis point increase today? And does that risk having to do more later on?
Yeah, so
that's a good
as
question.
we said,
Why not
at
just
the
do
last
it?
press
The whole
conference and in
point.
between that one and this one, we said that we would make our decision based on the
Based on
overall data coming
the
in. So
data.
if you remember, we got a surprisingly low reading in July, and then a surprisingly high reading for August. So I think you have to, you can't really, you never
talking
want to
about that
overreact too much to any
9.1.
one data point. So if you look at them together, and as I just mentioned, if you really look at this year's inflation, 3, 6, and 12-month trailing, you see inflation is running too high. It's
Yeah.
running 4.5% or above. You don't need to know much more than that. If that's the one thing you know that this committee is committed to getting to a meaningfully restrictive stance of policy and staying there until we feel confident that inflation is coming down. That's how we think about it.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask about the balance sheet. You all have left open the possibility that you might sell mortgage-backed securities, but we've seen significant slowing in the housing market. Mortgage rates have gone up significantly, and I'm just wondering whether conditions there might affect your plans for how quickly you have the runoff on the MBS side.
So what we said, as you know, was that we would consider that once balance sheet runoff is well underway. I would say it's not something we're considering right now, and not something I expect to be considering in the near term. It's just it's something I think we will turn to, but the time for turning to it has not come and is not close.
Well, and will conditions in the housing
We'll look
market
at it in
affect
a
that
second,
decision?
Tom.
I think a
It's
number of
almost
things
done.
might affect that decision, but the main thing is we're not considering that decision, and I don't expect that we will anytime soon.
Yeah, we're not going to start rate cuts. It's not happening, people.
Neil Irwin with Axios. A number of commentators have come to the view, and including over at the World Bank, that simultaneous global tightening around the world creates a risk of a global recession that's worse than is necessary to bring inflation down. How do you see that risk? How do you think of coordination with your fellow central bankers? And is there much risk of overdoing it on a global level?
So we actually, my colleagues and I, a number of my FOMC colleagues and I just got back from one of our frequent
Hole.
trips to Basel, Switzerland, to meet with other senior central bank officials from around the world. We are in pretty regular contact, and we exchange. Of course, we all serve a domestic mandate, domestic objectives, in our case, the dual mandate, maximum employment and price stability. But we regularly discuss what we're seeing in terms of our own economy and international spillovers. And it's a very ongoing, constant kind of a process. So we are very aware of what's going on in other economies around the world and what that means for us and vice versa. The forecast that we put together, that our staff puts together and that we put together on our own, always take all of that, try to take all of that into account. I mean, I can't say that we do it perfectly, but it's not as if we don't think about, the policy decisions, monetary policy and otherwise, the economic developments that are taking place in major economies that can have an effect on the U.S. economy. That is very much baked into our own forecast and our own understanding of the U.S. economy as best we can. It won't be perfect. So, I don't see it's hard to talk about collaboration in a world where people have very different levels of
Supply
interest
chain
rates.
is
If you remember,
basically the only
there were
thing
coordinated
that
cuts
other
and raises and
countries
things
or
like that
whatnot.
at various
I don't
times.
think you're going
But
to
really,
affect
really,
our
we're in
inflation.
very different situations.
Yeah, different.
But I will tell you that our contact is more or less ongoing. And it's not coordination, but there's a lot of information sharing, and we all, I think, are informed by what other important economies that are important to the United States are doing.
Yeah. Everybody looks at every data point,
Craig.
especially if you trade FX.
Craig Torres from Bloomberg. Chair Powell, you talked about some ways
That's on
the
their end, that
higher
correctly,
interest rates are
schematically, that's
affecting
not
the
on my
economy.
end.
But we've also seen a resilient labor market with durable consumption, strong corporate profits. And I'm wondering what your story is on the resilience of the economy. After all, you and your colleagues said, well, we started tightening in March when we were talking about interest rates in the future. And indeed, Treasury rates moved up. So we should have had a lot of tightening taking effect. Why is the economy, in your view, so resilient? And does it mean that we might need a possibly higher terminal rate?
You're right, of course. The labor market in particular has been very strong. But there are the sectors of the economy that are most interest rate sensitive are certainly showing the effects of our tightening. And of course, the obvious example is housing, where you see declining activity and of all different kinds, and housing price increases moving down. So we're having an effect on interest-sensitive spending. I think through exchange rates, we're having an effect on exports and imports. I think so. All of that's happening. But you're right. And we've said this. This is a strong, robust economy. People have savings on their balance sheet from the period when they couldn't spend and where they were getting government transfers. There's still very significant savings out there, although not as much at the lower end of the income spectrum, but still some savings out there to support growth. The states are very flush with cash, So there's good reason to think that this will continue to be a reasonably strong economy. Now, the data sort of are showing that growth is going to be below trend this year. We think of trend as being about 1.8% or in that range. We're forecasting growth well below that, and most forecasters are. But you're right. There's certainly a possibility that growth can be stronger than that. And that's a good thing because that means the economy will be more resistant to to a significant downturn. But of course we are focused on the thing I started with, which is getting inflation back down to 2%. We can't fail to do that. If we were to fail to do that, that would be the thing that would be most painful for the people that we serve. So for now, that has to be our overarching focus. And you see that, I think, in the SEP, in the levels of rates that we'll be moving to reasonably quickly, assuming things turn out roughly in line with the SEP. So that's how we think about it.
Mike, thank you.
Thank you, Mr. Chairman. In a world of euphemisms that we live in here with below-trend growth and a modest increase in unemployment, I'm wondering if I could ask you a couple of direct questions for the American people. Do the odds now favor, given where you are and where you're going with interest rates, favor a recession? 4.4% unemployment is about 1.3 million jobs. Is that acceptable job loss? And then given that the data you look at is backward-looking and the lags in your policy are forward-looking and you don't know what they are, how will you know, or will you know, if you've gone too far?
So I don't know what the odds are. I think that there's a very high likelihood that we'll have a period of what I've mentioned is below trend growth, by which I mean much lower growth, and we're seeing that now. So the median forecast, I think, this year for among my colleagues and me was 0.2% growth. So that's very slow growth, and then below trend next year. I think the median was 1.2, also well below. So that's a slower. That's a very slow level of growth, and it could give rise to increases in unemployment. But I think that is something that we think we need to have, and we think we need to have softer labor market conditions as well. We're never going to say that there are too many people working, but the real point is this. Inflation, what we hear from people when we meet with them,
a recession will help
that
inflation.
They really are suffering from inflation. And if we want to set ourselves up, really light the way to another period
of the word recession.
Very strong labor market, we have
Joe
got
Biden
to get inflation behind us. I wish there were a painless way to do that. There isn't. So what we need to do is get rates up to the point where we're putting meaningful downward pressure on inflation, and that's what we're doing. And we certainly don't hope. We certainly haven't given up the idea that we can have a relatively modest increase in unemployment. Nonetheless, we need to complete this task.
Yeah.
How will you know, or will you know, if you've gone too far?
He's saying if the rate hikes have been too aggressive, how will they know?
I mean,
and what can they do to fix it?
Our really
Will
tight
they
focus
instant
now
cut?
continues to be
He's trying
ongoing
to
rate
get
increases.
when
to
are
get
you
the policy
going to
rate
cut rates
up where it needs to be?
Out of it.
And as
And
I
they're
said,
not-
you can look at
none of them are gonna get that answer
as
because it's not
today's
happening anytime
estimate
soon.
of where we think those rates would be. Of course, they will evolve over time.
Chris Rugaber.
That's too much speculation.
Chris Rugaber, Associated Press. I wanted to follow up with what you just mentioned about the labor market.
Yes.
You've said
Really
several times
slow
that
growth is recession.
to have the labor
Correct.
market we want, we need price stability. And you've suggested maybe there isn't a trade-off in the long run. But in the short run, there is a lot of concern, as people have been expressing here, about higher unemployment as a result of these rate hikes, or as a result of the rate hikes. So can you explain, though, what about high inflation now threatens the job market? I mean, you seem to suggest that inflation, high inflation will eventually lead to a weaker job market. So can you spell that out a little more for the general public and how that would work?
So for starters, people are seeing their wage increases, their wage increases eaten up by inflation. So if your family is one where you spend most of your paycheck,
On
every
gas and
paycheck cycle,
groceries.
on gas, food, transportation, clothing, basics of life, and prices go up the way they've been going up, you're in trouble right away.
Yep.
You don't have a cushion, and this
Most
is very
Americans
painful for
don't
people
even
at
have
the lower end of the income and
$1,000
wealth
in their
spectrum. So
savings.
that's what we're hearing from people is, it very much that inflation is really hurting. So how do we get rid of inflation? And as I mentioned, it would be nice if there were, a way to just wish it away, but there isn't. We have to get supply and demand back into alignment, and the way we do that is by slowing the economy. Hopefully, we do that by slowing the economy, and we see some softening in labor market conditions, and we see a big contribution from supply side, improvements and things like that. But none of that is guaranteed. In any case, our job is to deliver price stability, and I think you can think of price stability as an asset that just delivers large benefits
Positive
to society
returns
over a
year over
long
year.
period of time. We really saw that for a long time. The United States had 2% inflation, didn't move around much, and that was enormously beneficial to the public that we serve. And we have to get back to that and keep it for another long period of time. To pull back from the task of doing that is you're just postponing. The record shows that if you postpone that, the
That's what
delay
he's talking about.
is only likely to lead to more pain. So,
From
I think we're
essentially,
moving
you've been in a
to
bull
do what
market.
we need to do and do our jobs.
That's
and
price stability.
And that's what you see us doing.
Thank you for taking the question, Mr. Chairman. Edward Lawrence for Fox Business. So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
2025.
How long? I mean, it really depends on how long it takes for wages and more than that, prices to come down,
I
for
don't know, I'm just
inflation to
saying.
come down. And what you see in our projections today is that inflation moves down, significantly over the course of next year, and then more the next year after that. And I think once you're on that path, that's a good thing, and things will start to feel better to people. They'll feel lower inflation. They'll feel that the economy's improving, and also if our projections are close to right, you will see
hear
that
me?
That the costs in
You should be able
unemployment
to hear me just fine. The
they're
mic is
meaningful.
turned
They're
all the
certainly
way
very
up.
meaningful to the people who lose their jobs, and we talk about that in our meetings quite a lot. But at the same time, we'd be setting the economy up for
Sometimes,
another long period.
Kathy, sometimes.
This era has been noted for very long expansions. We've had 3 of the 4 longest in measured history since we got inflation under control, and that's not an accident. So when inflation is low and stable, you can have these 9, 10, 11, 10-year expansions,
cycles.
and you can see what we saw in 2018, 19, and 20, which was very low unemployment, the biggest wage gains going to people at the low end of the spectrum, the smallest racial gaps that we've seen in since we started keeping track of that. So we want to get back to that, but to get there, we're going to have to get supply and demand back in alignment, and that's going to take tight monetary policy for a period of time.
As a follow-up, what is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What is that economic pain?
So it's all of those
that
things.
question.
Higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to restore price stability and then having to come back and do it, down the road again, and doing it at a time when actually now people have really come to expect, high inflation. If the concept of high inflation becomes entrenched in people's economic thinking about their decisions, then sort of getting back to price stability, the cost of getting back to price stability just rises. And so we want to avoid that. We want to act aggressively now and get this job done and keep at it until it's done.
People need to keep buying stuff.
Thank you, Chairman Powell. Nicole Goodkind, CNN Business. Existing home sales have fallen for 7 months straight. Mortgage rates are at their highest
something-
level since 2008.
Let's get it
Yet
over
mortgage
here.
demand increased this week, and housing prices are
Something
still
he said
elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market.
It's just
I was wondering if you
retraced
could
the
elaborate on what
entire
you
move
mean
here,
when you say
and
reset,
now you're starting to get
and,
that move lower.
what you think it will take to actually
The
get
market
there.
is probably taking this like
So
yeah,
when I say
mean, we
reset, I'm not
we're
looking at a
probably gonna
particular
see new
specific
lows
set of
because
data
he
or
has
anything. What I'm
been
really saying is that
extraordinarily
we've had
bearish
a
in
time of a red hot housing market all over the country where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market, as you know, where it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint,
they just want to hear rate
this
cuts.
Difficult correction should put the housing
because
market
they
back
don't
into
really know
better-
much
better
about the
balance.
markets, and they got to bring something of value to their customers.
Shelter made up such a large part of this hot CPI report that we saw.
It
Do
wasn't
you think
hot.
that there is a lag and
I
that
mean,
we
it
will
is
see
hot.
that come
I
down in
guess
the
it's
coming
well
months, or
above
do you
their
think that there's still this
goal,
imbalance
but
that
it
needs
was
to be
lower
addressed?
than last month.
I think that shelter inflation is going to remain high for some time. We're looking for it to come down, but it's not exactly clear when that will happen. So it may take some time. So I think hope for the best, plan for the worst. So I think on shelter
Hope for the best,
inflation,
plan for
you
the
just got to
worst.
assume that it's going to remain pretty high for a while.
Okay, we'll go to Jean for the last question.
I think they're talking about rent, maybe.
Hi, Jean
Shelter
Young with
inflation?
Market News. You've talked about the need to get real rates into positive territory, and you said earlier that policy is just moving into that territory now. So I'm
Hey,
curious,
thanks, PK, for the
how
super
restrictive
chat.
is rates at 4.6% expected? Is that expected to be next year? How restrictive?
So I think
Very
if you look,
restrictive, or at least under
when we
the
get
median
to,
line.
if we, let's assume we do get to that level.
Yeah, rent
which
and the cost of
I think
homes.
is likely.
Yeah, that's what I figured.
What you're going to do is you're going to adjust that for some forward-looking measure of inflation, and that could be, you pick your measure. It could be, there are all kinds of different things you can pick, and you get. But what you'll get is a positive number. In all cases, you will get forward inflation expectations in the short term. I think that are going to be, assuming that we're doing our jobs appropriately, that will be significant. So you'll have a positive federal funds rate at that point, which could be 1% or so. But I mean, I don't know exactly what it would be, but it would be significantly positive when we get to that level. And let me say, we've written down what we think is a plausible path for the federal funds rate. The path that we actually execute will be enough. It will be enough to restore price stability. So this is something that, as you can see, they've moved up, and we're going to continue to watch incoming data and the evolving outlook, and ask ourselves whether our policy is in the right place as we go. Thank you very much.
All right, there he is. So we just have to see how the market digests this news for the rest of the day. The summary of economic projections, in, in conjunction with the Federal Open Market Committee meeting held. Oh yeah, okay, I got you. This is all the charts and stuff that he posted and discussed. Thank you, man. I'll take a look at this a little bit later. So right now, what we want to see is our overall bias coming into this news meeting. That the dollar rejects up here, puts in a third drive, but then rejects. So that way we could see if we do potentially have that distribution going on in the dollar. that could be significant for risk markets, meaning that people are running away from the safe haven asset and getting ready to go back into more riskier assets. So that's what we got to basically see that happen first. CPI was 8.3%. Projections are looking for a little bit lower next month as well. You will have 3 points, which would be a trend on CPI. Let's do this real quick. That's the unemployment rate. So there it is. I mean, it's not great, right? It's still very high. I mean, that's your inflation rate right there. You could see that we did get up there, and here we are. So it is coming down, but it's not trending lower yet, right? We need to see this thing trending lower. I do believe that this is only monthly prints. Yeah, it only prints monthly. So you can see that June was the highest one, going in at 9.1. Then we had a lower print for July. And then here in September, we just got August's number of 8.3%. 1, 2. So 2 points makes a line, 3 makes a trend. We definitely want to see CPI start trending lower. If CPI starts trending lower, then that means inflation is going lower, and that should be bullish for the market. If it's not, then obviously the market participants are looking at other data, is basically all one could say. But yeah, there we are. So we'll see if the dollar plays out the way that we want it to today. Let's see if it gets back under that last daily resistance. See if we start getting lower closes. If that occurs, I think Bitcoin from here could start to see a bit of a bullish trend. It's probably not going to be uber bullish because September is still known as a negative month, typically even in normal conditions, and we are definitely not in normal conditions. So that's that. If we close under daily resistance, it's not going to look super good. So for anybody that did take the bullish trade on Bitcoin here at daily support, you're going to be watching resistance. We need to close above yesterday's open, preferably above yesterday's high, as that would be somewhat of a bullish signal, and we could potentially see market participants start to look for those bullish entries maybe tomorrow going into Friday. So today's close will be very important. A close under resistance is not going to look good at all, seeing how you just broke down below this support yesterday. So this is your last daily support. This is your last line in the sand. If we go over here to the monthly time frame, you can see there's monthly support. Here's weekly support. Notice how they are trending lower. Here is daily support. See that? So essentially, you just got sold at monthly support. So yeah, if we lose this level, this low is probably more than likely going to get taken out. And if you take out that low, you could see much lower prices. Let's go see where the S&P 500's low is. How far away is it? It's still struggling here, but there's the low. That's your bear market low. So you got to get under that before you could see any real volatile declines come in. This is still standard for a decent pullback. If you look at the expansion that you've seen since the June lows on this advance, if you pull a Fibonacci retracement from that, you can clearly see your 5618 and the 702 retracements here. This is basically the line in the sand. If you lose this area, then traders such as myself and others will be targeting 3639, which is back down there to the June lows. All right. If the 2008 fractal is going to play out, we'll know once we get under those lows that, you know, there's potential for a much larger decline. And that's good news, because if you want to be a participant in the market, if you want to be an investor, or for your overall 401k, it's not good news. All right, obviously. And I don't mean to I'm not trying to disrespect anybody that's lost a lot of money from this downturn, these economical conditions. But overall, it is a good thing because you can add to that portfolio at lower prices. And this will end. The bull market will come back. People that are looking for a 10-year decline in asset prices, they're just wrong. The Fed, this will get taken care of. Inflation will start to go lower. The markets will snap back. If you just turn this thing into the 3-month and look at it, it's a bullish asset with occasional bear market declines. But overall, for the long term, this asset only goes up, right? So this is a good place to potentially be a buyer. You've seen what happened during the pandemic back in March 2020. You had 1 quarter of negative growth, and then it was just running to the races. But this is also when Fed started to implement a lot of their TARP plans, if you will, buying asset purchases and all that, to basically put a support under the market. And now we're paying for all that. So everything they did to stop this decline is got us in the decline we're now seeing. Yeah, it's funny. They tried to fix a problem by slapping a Band-Aid on it, and up here the Band-Aid has fallen off. But to be fair, from those lows to here is 120% gain. So if you bought during the March pandemic, during that downturn, you made over 100% on your investment. That's not bad, doubling your money in just a few short years. So, yeah, we have a bear market now, but eventually the bottom is going to come in here. And we know from historical data, especially for Bitcoin, that where we currently are is a place to be the buyer, right? It's definitely the place to be a buyer. Let's go look at the BLX index, pull up the 200 weekly, and you can clearly see, well, I have to do it this way. Let me do it. So there, I mean, anytime you're under this red line, it's hard to see. I know this isn't my normal. Anytime you're under this, it's typically been the time to start looking to add risk to your portfolio, right? Almost every single time in history. And as far as the S&P 500, you haven't even gotten to its 2-week, right? To its weekly 200, essentially. So, yeah, it looks bad out there, but it's a buying opportunity for us. And we'll see if Bitcoin can hold support today. It needs to hold this. If we lose this, we're going to flip. I mean, we're going to be bearish, right? We nailed the short up here on the CPI. We're trying to take a long down here because we are in a range-bound condition. You are range-bound here. So the best place to be a buyer in range-bound conditions is at the bottom of the range. And you are at the bottom of the range. So obviously, I don't know if it's going to go lower or not. Nobody does. But you can manage that by just simply putting a stop under the low here or under these lows down here. But not if you took the trade today as a day trade. That would definitely destroy your risk management, depending on how many of a percent you were risking in this trade here currently. But intraday, it's not looking the best. We simply just migrated right back up to where we were by when we got the actual minutes. Then you sold off. We migrated right back up there, and you're having a little bit of difficulty up there. Intraday, there's not really much of anything in the way of levels other than you have supply here. You have supply right there, but like finding that level and deciding to get short at that level would have been difficult because there are many different levels inside of this that would have been potentially looked at as well. But as of right now, as long as you stay green, you're going to close with a bullish engulfing candle. You've taken out yesterday's lows. You've taken out yesterday's highs. So a close up here above this resistance would absolutely be a fantastic thing for us, seeing how we did try to take that bullish trade. So yeah, that's that. S&P 500 is back to being bearish on the day. It's not exactly good. Let's see where our support is here. You do have a weekly support there. That is currently what you're struggling with. So we're going to be watching the close on Friday to see if we're under 38.24 or not. If we are, we'll be looking for price to trade back up to around 39-ish, 39.30-ish. What is that, 39.30? Right in here will be a decent spot to look for sell side entries, targeting, the bear market lows based on what we heard today. So he's essentially going to keep it restrictive. I don't know if we have that restrictive picture here or not. Let me go read through them real quick to see if that restrictive model is in here. He didn't show it, so it's not likely to be in here. Oh, and PCE is another number to keep your eyes on as well. The PCE inflation, CPI and PCE, they like PCE a little bit better. They think the PCE is a little bit more of a quicker reacting indicator than the CPI, but CPI is actually core inflation. There's a lot of stuff. Yeah, they don't have what he's talking about as far as the restrictive model up there. But you can clearly see anytime you get a bullish engulf like this on a weekly closing basis, and then the very next week you get a bearish engulfing, that is a bearish signal. So with what he said today and with the current market structure that we have, looking for shorts isn't a bad idea. It's as simple as that. Right. But if you think that's, there's a couple reasons why I want to be bullish down here, simply because it's at the low of the range. And if the market decides to take this as good news, which could happen tomorrow. So tomorrow, if you're getting more downward pressure, if those sellers are here and hitting the markets hard tomorrow, then we're going to be looking to sell the rallies come from here on out. There is no bullish signal as far as technicals. We have the way we trade over here is typically we want to see where price is in relation to the 21 exponential moving average as well as the RSI. That is not the RSI. We'll go up here. See, you're trending under the 50. That's typically your bearish control. If an asset's under 50, then the bears are in control of it. If an asset's above it, then you can look for buys. Currently on risk, you're right back down to yesterday's low. It doesn't look good, right? It doesn't look good. And like I said, when he started talking about negatives, the restriction and all that's not good news. The market's not going to like that. And then here's your Bitcoin trade. You've just been trending sideways under the 50, waiting for today. We got the news. We got the actual minutes. So it's likely that you're going to see the sellers return. Unfortunately, it is what it is, right? There is the support level, 18,790. Just keep an eye on that. And today's close. If you get under that, then any bounce back up into $19,500 is going to be looked at as a selling opportunity. If you get higher than that, the next place to look to be a seller would be 20,128, and so on and so forth, right? But if today sells off, if today closes under, my bet is you'll probably see a good 2-3 days worth of downside expansion. A close above daily resistance, then the opposite is true. Then we could look for potential bullishness moving on from here. Open interest down, bearish CBD. Let me pull that up over here. I have to log in more than likely. Let me see here, and we'll go look at that data. Thank you guys so much for being here. I really appreciate it. I know, I appreciate it. We'll just leave it at that. Thank you so much for being here. All right, so here we got, let's go look at the open interest. Yeah, and since the open interest has been trending so high like this, yeah, I mean, we're going to see a drop on open interest if we take out the June lows. More than likely, right? Let's see if the put to call ratio is starting to get a little bit of a spike. This is normal. A few days before the meeting, people start to load up on those puts. Price isn't really going up, but just the fact that the meeting is coming up, one of the biggest news items, that we get, people are going to start to protect their downside. I did get stopped out, as you heard there, on that ding. Essentially, my entry was so bad from the spread, I guess, that once we got back up near the high of day, I went ahead and took profits and moved my stop up a little bit. And on this last 5-minute push, it took me out. And it looks like that right there. So I was trying to buy it down here at this line, and I market ordered in, and my fill was all the way up there. Terrible, terrible fill on that execution. It is what it is. You can't cry over spilt milk. It was a profitable trade. I was just stopped out of it. I will be watching this support level here. If we get back down to there with, low volatility, then I might try to get long again. If we start closing hourlies under this level, then I will leave it alone, right? I will wait for a rally to sell into. The short position currently that I am still in on the USDC side of the platform, still in good shape. It's still cooking along, obviously. So, yeah, we'll see how it goes. Bro, we have enjoyed your show. Thank you very much for being here, man. The world loves you. Appreciate it. What is open interest? Currently, it's setting roughly around $12 billion. Yesterday, it was $10 billion. So it's not as high as, where we've seen it as high as 14 and 15 billion before. But 10 billion is still, it's still pretty decent open interest. And that's across all exchanges. That's like a total, still decently high. Around 4 and 5 is where we will get eventually if the market keeps trending lower. People will lose interest, and it'll just be the hardcore traders like us. We'll be literally the only ones in the market. And that once retail comes back, we'll be back when Bitcoin's making new all-time highs, unfortunately. That's when everybody becomes Bitcoin lovers again. So we'll see what happens. The accumulation trend score is over here. We did start to lighten up a little bit the last few days, so that is more accumulation than what was happening last week. But unfortunately, it's still not a lot of accumulation. I would like to see a lot of accumulation here, but we're not getting that. And that led me to believe that the risk would be to the upside. Like, that's where the liquidity is setting most of, is to the upside. Everybody's short. Everybody thinks price is going down to $10,000, $5,000, $4,000. I think 13.8 is the lowest you'll go if you get down there. I honestly believe that the low is in, right? Because inflation is starting to trend lower. If we get a higher number next week or next month, then that low isn't going to be the low. Not at all. But your MVRV is still trending inside of undervalued. So this is typically the time to be a buyer on this indicator. Anytime you've been down here in the green, you have wanted to be a buyer instead of a seller. You are in the green. We were sellers up here, right? Up in here, we were sellers. We don't want to be sellers down here. We want to flip our bias, flip our narrative, because everybody else is bearish. We want to stay ahead of the the herd, if you will. So yeah, everybody's bearish right now. That's why I'm looking for the low to be in, or pretty soon the low is going to be in. The options implied volatility got a rise today. Obviously, FOMC, that is priced into the market, no doubt. Liveliness is in a look. Liveliness is another metric that I've been looking at here. It is this orange line. White line is Bitcoin's price. When liveliness is trending down, it does suggest that people are starting to buy again. The Pule multiple was also in an area where you could absolutely call it a place to be a buyer, not to be a seller. You go out and see all the red zone is typically where you want to be a seller, right? Or where you want to take profits whenever Bitcoin becomes in a growth cycle again. You'll be, taking profits up in there. This is definitely the place to be looking for bullish positions. If you think there's going to be fresh yearly lows, then wait for those fresh yearly lows to be a buyer. But on most of these on-chain analytic tools, everything is pretty clear about one thing, and it's Bitcoin is cheap, right? Bitcoin is cheap. So we just have to see how the market reacts to this news today. And we'll see that on the close, on today's close. Thanks, Run, for being here, my friend. Thank you guys so much. But yeah, we'll go ahead and wrap it up. ETH soon below 1,000. Let's go look at ETH real quick. And if you guys want me to look at a specific asset, go ahead and drop the ticker in the chat, and I will take a look at it, and then we'll wrap it up. We've been live for a little over an hour, almost 2 hours here, but that press conference was longer than I expected it to be, and everything sounded good up until the end when he basically said that they were going to keep it in a restrictive under the mean there. So yeah, that's why the sell side's coming back based on that and that alone, really, because everything else we already knew was going to happen. So Ethereum getting getting the merge, and it was a sell the news event. The news actually came 2 days before when we got the CPI print. That's when the bearishness really kicked off on this. If you clone this trend line right here like this, you'll see that you are at the bottom edge of a channel here. Well, maybe not. Maybe it was Bitcoin. So if you use that wick, you can see here, let's get it where it needs to be, right there. You can see here that you are at the bottom edge of a channel. And I mean, it's not a bull flag based on that, on the size of that expansion and the size of this. One could only say, yeah, you're in a decreasing channel. So you don't want to necessarily be a seller at support either, do you? Right? You don't want to short into support. The best play right now is either to be a buyer at support if support holds today, or wait for a bullish rally to then sell, right? Wait for the bullish rally, then sell it, then sell the top, sell it into resistance. That'll be the best place to be a seller. So that's what you wait for. I don't suggest waiting all the way up here. I don't think you're going to get back up there. If the market breaks down, then you'll be selling near-term resistance levels, right? But, I mean, overall, it looked really good coming off of the highs. I mean, off of the lows. It looked really good. At one point, we were up 130% off the lows. But Ethereum also here versus Bitcoin, you can see it was kind of making a distribution formation there. This white line is weekly resistance. We traded up to weekly resistance, and after 3 days of weekly resistance holding, you got that impulse leg to the downside, and then another bullish rally here for 2 days. They sold into it. Boom. That was the merge. So, yeah, I mean, you're down 20% from the resistance right now. So this could mean that Bitcoin may outperform Ethereum moving on from here if this continues to go lower. So what I would say is, if you're looking for those opportunities, if ETH BTC starts trending higher, I would probably watch ETH for day trades instead of Bitcoin, because we know that when ETH is trending higher against Bitcoin, then it's outperforming Bitcoin. So you might get a 2% move on Bitcoin in a day, and you might get a 4.5 to 5% move on Ethereum. But with it trending lower like this, then we go right back to watching the king of all assets, and that's Bitcoin. Well, the king of all cryptos, and that would be Bitcoin itself. So as long as this is trending lower, we will be looking for those day trade opportunities inside of Bitcoin. But if this starts to go higher and it starts to regain dominance against Bitcoin, we will be looking to play Ethereum more or less. All right. So yeah, it's not looking the greatest right now. Everything looks bad, pretty much. But the only bullish signal that you could give or say here on Ethereum is that you are into potential support. We pull it up over here, we can actually look at it on daily. We can actually look at this here. So yeah, I mean, volatility was moving to the upside. Momentum, however, has been trending or staying at the lows, whereas volatility was expanding as price started to break down. This is going to be because of, the merge, buy the news or buy the rumor, sell the news. Here is your weekly time frame. So weekly volatility, we're coming off a little bit. That's good news, right? You don't want to see weekly volatility starting to climb. On Bitcoin, you're at the lows on weekly volatility. So a breakdown below daily support is going to have this thing, if this thing starts expanding to the upside as price is going lower, yeah, you could see a pretty good size out, or a pretty outsized move to the downside. 13.8 will be our next target if June's low gets taken out. All right. So, but yeah, as far as being back under 1K, you don't have far to go, right? There's $1,000 weekly support down here. There you go. Yeah, it does look like it's trying to get back there. Oh, you could fib that expansion just like how we did on the S&P 500 not too long ago, and you could see that you're still looking good. I mean, you've only retraced this bullish move or from the lows to the 50% or 6.8 retracement. So this is still, this is like your last hope, essentially. Not on Bitcoin, only on Ethereum. Is this enough in itself? Is this Fibonacci retracement enough to invoke buyers? Yeah, it is. Will it be enough to get price to move up? We don't know. We definitely know we want to be a buyer down here, but we got to do that at high probable areas. MVRV has also reached 45, waiting to see if that happens again. Yeah, it can go lower. It can. But how much further is price going to go if this goes lower, right? That don't look right. It is right. How much lower, right? How much lower can it go? It can go down there. It's been trending up. If you put a trend line on this, I can't, but if you did, you would see that these lows have been trending up. I think we're close to the low. I really do. Based on this and the simple fact that Bitcoin has, on this bear market move here on the weekly, you have never been more oversold than we got this time. Ever. In Bitcoin's entire history. So we'll go to the weekly and pull this up. This is the most oversold you ever got. This is all of Bitcoin's price action on the weekly. You got oversold down here once. That was, as we know, a fantastic place to be a buyer. You got oversold right here once. As we know, in hindsight, that was a fantastic place to be a buyer. Here you are, the most oversold it has ever been. And people believe it or not, are still looking to be short. Yeah, no, that's not how this works. You don't want to be a seller when you're essentially, you're not at there anymore. Obviously, you've bounced, but I mean, people are sellers down here. You don't want to be a seller down there. But we did get a bounce, to be fair, and there was once in history where we did hit oversold, essentially, got a bounce, and then made lower lows on the actual tool itself. Let's go see if that was divergence. So right here. Yeah, no, it wasn't. So, yeah, that was the low. Then you traded sideways for how many weeks here? 1, 2, 3, 4, 5, 6, 7. Instead of counting it, I could just pull a tool up over here. Yeah, so this was your low until you took out the low on this candle there. So 13 weeks, you traded sideways before you took out the lows. And when you took out the lows, you got what? One, counting this candle, 1, 2, 3 more weeks of downside before that ultimately marked the bear market low. So if the bear market low isn't in here, it will be soon. You see what I'm saying? So being a buyer under $20,000 is a good idea, right? Let that other push lower if you want. You can wait for bullish divergence if you want before you become a buyer again. Wait for bullish divergence on, say, the weekly time frame. I don't know that you'll get bullish divergence on the weekly time frame, but you know, everybody's different. Everybody's strategies are different. Everybody's ideas of what the market does is different. But I'm definitely not looking to short it down here. I can't short it down here. So the only thing I am is either a buyer or I'm sitting on my hands and trading other assets. And, you know, we can trade other assets, right? We can just go right over here to Bitget and find assets that get massive bullish rips and look to sell into those. Compound is up 8% today. We were looking to sell CHZ the other. Look at that move it got based on the Fed. Right up into resistance. Yeah, so you can look to short something like Compound instead of Bitcoin if you think Bitcoin's going to keep going lower, because it's up. Bitcoin is down. You are amazing, Heath. Thank you, Arthur, my friend. Really appreciate all the great compliments. Thank you all so much. You guys are the ones I do it for, right? Thank you to the 2 super chatters very much. I appreciate that as well. Always, of course. This can be the beginning of the end. .com bubble 10 years to recover. That maybe, I mean, if inflation keeps going down, yeah. But if inflation keeps rising, then yeah, it's possible. But why look for something that rarely ever happens? Why not? Yeah. Hey, you guys can short it wherever you want, right? It's your money. I'm trying to help you become profitable, get you to stop thinking the way you were thinking before you started watching my channel. Because my channel is designed and specifically built to help you start thinking like a professional trader. Turn your inconsistent negative P&L into at least consistent entries I'm talking about. That way you can then start to see how this market, how trading really works and how to be successful. When you reach consistency, then we can build it to where you can become profitable. And those are the 2 words that every single trader is looking for. Consistently profitable. You will learn how to do that here. Buy at these levels is wise, says Leo. Market is selling off. Yeah, the market didn't like what the Fed said there at the end. If we go to 10 to 12K, I'll mortgage my house and buy more Bitcoin. Yeah, I don't know if that's the wisest of decisions, but I'm right there with you. Yeah, I'll be a buyer like nobody's business at 13.8. I'll start there, which I've already started adding to the HODL portfolio. And since I am trading on the inverse swap contract, every time I make a profitable trade with Bitcoin, it's just adding to the amount of Bitcoin that I hold, right? So I'm at these prices, I'm trying to accumulate as much Bitcoin as possible, for sure, for the next bull market phase, whenever that may be. NQ, SPX, Dow Jones. Sure, we'll go take a look at them real quick. We've been looking at the S&P 500 often, but maybe you just got here. So the Dow Jones has completely given back all of the gains. It's completely retraced. You are completely under this. This is where you would wanted to see it hold. You can see how when price did trade into it, you did get that bullish rally, and then CPI, boom, and here we are. So it does look like it's reaching for the bear market lows, the Dow Jones. Dow Jones, big red day today. Big red day today. Big red day today. Dow Jones gave a phenomenal short entry at daily resistance right there. There you are. That would have been the place to short if you were looking to get short. Beautiful short entry on the Dow Jones. Here's the Russell. You can see it's lagging a bit, but it has as well dropped below where we rallied from. This was 20% off the lows, so this was potential bull market status. But you have since dropped down. It's got a little bit lower to go before you could consider it, looking for the lows again. You can't sell it now at the lows. This is where you're taking profits if you took the trade today. And here's your NASDAQ, same thing. Big red candle. Well, a big bearish candle. It's an engulfing. You completely engulfed yesterday's candle as well as the day before's and the day before that. That's a bearish signal in a downtrend. Bearish engulfings are fantastic continuation signals. Here's your Qs. Looks identical. There's the smaller rut, or I'm sorry, here's the rut. We were looking at the IWM earlier. Same thing. S&P 500. This is the index on Oanda. It's the CFD. This doesn't have any gaps in it. That's why we look at it. But in America, we can't trade CFDs. Big move to the downside here. And you're trading on the daily lows. Next area of potential support, S&P 500 is going to be 37.93. That's right there. It's not a weekly support. You're currently under weekly support. Next weekly support is all the way down there. That is if you close under here. If you close under that, then any rally back up into 39.29 will be met with sellers, and this will be their bear market target. All right? Or that trade target. But that's pretty much that. And here's oil futures. I don't know why I have oil futures over here. This is supposed to be over there. But I wanted to look at oil. Let's go look at this. I mean, it's into an old support, but you're getting that downside continuation. We were sellers of oil over here because it was into resistance in a downtrend, and that trade worked out beautifully. I mean, yeah, we do it right over here. We nail these trades. We nail them at the highs. At the highs. If we go to, yeah, I read that. Great work, Heath. Thank you, Dustin. Narwhal Tacos, 10 years, getting big inflows here. Oh, yeah. Yeah, let's go look at the inflows. We got inflows coming in. Wait, something. Oh, that's why. Hang on, let me get rid of this. We got inflows starting to come in here. That's better than not seeing inflows. Like I said, we haven't seen any bullish inflows or any inflows at all since June. So we're starting to get that here. There was a brief period here when Bitcoin traded sideways that you did have some buying going on there that amounted to a nothing burger, and that was here. That was in this tight consolidation right in there. You got this little bit of bullish inflow here. We are starting to see them, and they are climbing. Oh, daily support's the line to watch, guys. 18,790 spot 91. That is the place to be a buyer if you get down there. If you start closing hourly candles under that line and you start trending lower, then don't be a buyer. Wait for another daily support to be formed. It could be 4 or 5 days from now before you finally get a support zone formed. But today and into tomorrow, that's the price. That's the price. Great analysis. Heath had an awesome night. Thanks. Or peace, brother. Thank you. You do the same as well. Wolfgang Fuchs. Bitcoin with more local bearish CVD in the PD POC. Thanks for the comp short hint. Yeah. We could look at volume profile. It did look a little bit better earlier, but it has migrated up to around the middle of the range for today. We can clearly see that on Coinbase's data feed, the buyers are still beating out the shorts. So the bids are on the right. I mean, on the left, the sells are on, or the asks are on the right. So as of right now, you're at 19,000 Bitcoins being bought, 15,000 Bitcoins being sold. And the point of control is here. So that means at around 19,300 bucks, we'll call it. That's where the most volume has been thrown down today. Right in there. This is the area to look to be a buyer today if you get back down there. I won't like the fact that you're back down there, so just keep that in mind, because you know, how much volume do you get coming down? Typically, you know, when you make a low a day and then a high of day and then instantly go back and revisit the lows, that's not a bullish signal, that is a bearish signal. So here is your daily open, fresh high of day, fresh low of day. Then you migrated at the London session. You migrated away from the low of day. Nice big push, take out yesterday and the day before's high, and then instantly right back down to make a fresh daily low. That's not usually a bullish signal, but we'll see. We'll see if support holds. Down here is where you want to see support. Is it possible that this hourly demand holds as well? Yes, it is possible. It is possible. We don't know what's going to happen. I can't see into the future, but we know the levels to be buyers and sellers. That's where our edge is, right? We take trades at the most highest probable places to work out. All right, we're going to go ahead and wrap it up, guys. Once again, thank you so much for being here. I really appreciate all of you. You guys are the reason that I do this. If you have any specific questions, you can throw them down in the comment section as I read every question, even the spam bots. I read them too. I try to delete them, but I do read them. So if you got any questions, you can do that in the comment section. I will answer your question. Other than that, we'll see you guys next Tuesday for the public streams. We do streams every single day inside of the Discord if there is a trade to take. If there isn't a trade to take, I don't do it because, well, there's no reason to go live and just sit on the microphone and not say anything at all. So yeah, but if there's trades to be taken or something to be discussed, we do that every day. So y'all have a fantastic day. Make sure you all trade safe. Make sure you trade smart. And as always, happy trading, everybody.